In the sprawling landscape of industrial giants, there are companies that drift, and there are companies that steer. For decades, Carrier was a massive, but somewhat indistinct part of a larger conglomerate. It was the name on your air conditioner, a brand synonymous with cooling, but as an investment, it was buried inside United Technologies. But today, we are telling the story of a company that decided to break free, sharpen its focus, and bet everything on the most pressing challenge of our time: climate change. This is the story of Carrier Global Corporation. Ticker symbol CRRR. We have analyzed their entire journey as an independent public company, from the foundational annual reports of 2020 through 2024, to the pivotal transformation revealed in the quarterly filings of 2025. This is not just a story about HVAC systems. It is a story about the re-engineering of the built environment and a company that has transformed itself into a pure-play leader in intelligent climate and energy solutions. To understand the Carrier of late 2025, we must first look back at the bold strategic decisions made in 2023 and 2024. Annual reports from these years reveal a management team that was not content with the status quo. They looked at their portfolio, which included fire safety and security businesses, and realized that, while these were good businesses, they were not the future. The future was in climate and energy, so they made a massive move. They announced the acquisition of Viessmann Climate Solutions, a German giant in the heat pump and renewable energy space. At the same time, they decided to sell off their global access solutions, industrial fire, and residential and commercial fire businesses. This was a complete portfolio overhaul. It was risky, it was complex, and it changed the DNA of the company. Fast forward to the 10Q filings for the first 3 quarters of 2025, and we can see the results of this grand experiment. The dust has settled. The divestitures are largely complete, generating billions in net proceeds. The acquisition of Viessmann is fully integrated. What remains is a leaner, faster, and more focused Carrier. The financial statements for 2025 show a company that is no longer distracted. The revenue mix has shifted dramatically towards high-growth areas like residential heat pumps in Europe and massive commercial HVAC systems for data centers in North America. The transformation narrative is no longer a promise. It is a reality reflected in the balance sheet. Let's dive deeper into the growth engines driving Carrier in 2025. The first and most obvious is the regulatory tailwind. Governments around the world, particularly in Europe and North America, are pushing for decarbonization. They are banning fossil fuel boilers and incentivizing electric heat pumps. Carrier, with its acquisition of Viessmann, instantly became the leader in the European residential market. The 2025 quarterly reports highlight how this segment is performing, navigating the short-term subsidy fluctuations while capitalizing on the undeniable long-term trend of electrification. They are not just selling a box that heats your home. They are selling a digital ecosystem that connects solar panels, battery storage, and heat pumps into a single, efficient energy management system. The second engine is the data center boom. We often talk about AI in terms of chips and software, but AI generates immense heat. You cannot run a modern data center without sophisticated cooling. Carrier's commercial HVAC segment is a primary beneficiary of this trend. The 2024 annual report and 2025 filings point to strong orders in the commercial applied sector. Carrier provides the chillers and cooling solutions that keep the cloud running. As hyperscalers build larger and denser server farms, the demand for Carrier's high-efficiency, water-cooled, and air-cooled systems is skyrocketing. This is a secular growth trend that has a long runway ahead. The third engine is aftermarket and digital. In the past, an HVAC company sold a unit and maybe saw the customer again in 15 years. Today, Carrier is building a recurring revenue model. By connecting their units to the cloud, what they call the Abound digital platform, they can offer predictive maintenance, energy optimization, and remote monitoring. The 2025 reports show steady growth in aftermarket services. This is high-margin revenue. It transforms Carrier from a cyclical equipment manufacturer into a sticky, service-oriented technology partner. When a building manager can see exactly how much energy they are saving in real time, they don't just buy a product. They buy an outcome. We must also discuss financial discipline and capital allocation. The sale of the fire and security businesses in 2024 and 2025 brought in a flood of cash. The management didn't just sit on it. They used it to pay down the debt incurred from the Viessmann acquisition, rapidly deleveraging the balance sheet. This was a critical move that maintained their investment-grade credit rating. Furthermore, the 2025 filings indicate a resumption of share buybacks. This signals confidence. It tells investors that the transformation is funded, the debt is manageable, and the company is generating enough free cash flow to reward shareholders directly. However, no investment is without risk. The transition has not been painless. The European heat pump market faced headwinds in late 2024 and early 2025 due to policy uncertainties and economic slowdowns. CARR's filings are transparent about these challenges. They are navigating a complex landscape where interest rates affect construction activity. Yet CARR's geographic diversity helps. While Europe adjusts, North America remains robust. While residential slows, commercial accelerates. This resilience is the hallmark of a well-structured portfolio. So what is the final verdict for the long-term investor looking at CARR Global in late 2025? The company has successfully executed one of the most complex industrial pivots in recent memory. They are no longer a conglomerate of disparate parts. They are a focused climate tech leader. The bust phase of restructuring and divestiture uncertainty is over. The boom phase of capitalizing on global decarbonization and digitization is underway. As the world gets hotter and as the demand for energy-efficient cooling and heating grows, CARR is positioned not just to participate in the market, but to lead it. For investors seeking exposure to the megatrends of energy transition and AI infrastructure, backed by a company with a proven track record of execution, CARR represents a compelling, modernized industrial play for the next decade.